Okay, guys, welcome to the first lesson. Can everyone see my screen now? Voice is a bit grainy and delayed. Not sure if it's on my side. Is it like that for anyone else? Just put it in the chat if you guys can hear me without grain and stuff. It could be your internet connection, Charles. If you're using mobile data while everyone's on your tower. Yeah, there we go. Move closer to the router. And can everyone see my screen nice and clearly? I did upgrade my Discord so I can stream in HD for you guys. I just need an okay if you can see my screen. Has everyone been able to watch the screen? What's up, Wade? Welcome. Yeah, we're about to get started soon. 100% for you, Stu. Cool, bro. Thumbs up from Spencer. Cool. Okay, guys, I think we can get into it now then. I think that's everyone for now. I know Rain and I think there's another that have load shedding now, so I'm recording the session. As I said, I will record every session and then post it in the tier 1 resources for you guys. It's only for you guys, so no one else will see it. I'll post it on my YouTube channel as a private link so no one can see it. Just so you guys can go over it again in your spare time, as well as when you're doing the homework, etc. I just want to show you guys something pretty cool. What we are learning, etc. I have started developing my own indicator on TradingView. So you all should have TradingView now. This is the charting platform where we are going to break down every chart. Matt Breed hasn't loaded for you yet. I think you need to click on my name and then watch my stream. Click watch stream. Tell me when you're up. Might be your Wi-Fi. It shouldn't be your Wi-Fi. Just see where you can click to watch my stream. It says I'm live. If you can click on there, I think you can watch my screen. Has everyone else got their screen open? Wait, if you could just mute yourself. Matt, have you figured it out? While Matt figures it out, as I said, I have been making my own indicator for smart money concepts. We're going to use all of this. So if I turn it on, you can see it identifies order blocks, the lower highs, lower lows, weak lows, equal lows, fair value gaps, break of structure, changes of structure. Still working on getting these fair value gaps to extend to the right. If we go into the settings of it, there's a lot of stuff we can do. We can even change color of the candles to show if we've changed character, if we're in a bullish or a bearish move. You can show the daily, weekly, and monthly lows and highs, which are critical liquidity points as well. But we'll go over that once we've learned all the basics of that, like breaks of structure, etc. So if we go into TradingView, first thing is you're going to want to set it to dark mode. This is what I've got it set as. So you go in here, up in your settings, top right, and you go in appearance, I think it is. No. Here. Dark mode enabled. If you look at how terrible that is to look at on a daily basis, you'll strain your eyes. So that's one thing I can say. Is always have your charts in dark mode. Then appearance wise, I like to change my bodies of my candle from green to blue and downwards to white, borders to blue. Just it's a mental thing for me that I don't like seeing red candles and green candles on a chart. For me, that signifies go and stop. And you want to trade what you see, not what you feel. And if it's making me feel like that, I'm not going to keep it like that for long. Another thing is Fibonacci. I will just post, I've got a few templates, but this is the one we're going to be using the most. I will take a screenshot of this and post it in the resources for you guys. I'll post that for you guys after the stream, just so you can set up your own fib to where it's like I've got. And a Fibonacci tool you can access on the left pane here. Let me just go over my favorites. You can see my favorites are here. So to create a favorite, you go and you click the star next to it. So I've got the cross, trend line, horizontal ray, vertical line. And we got the Fibonacci, brush, rectangle, circle, path curve. Text, price label. Price label is a good one. You can label that price there so that you know. But basically, I'll take another screenshot of this so you guys can see my favorites. We do have some new guys in here, so new guys to trading. So I'm just covering all the basis in this first lesson. We're going to go over setting up trading view like this, market structure, as well as a few websites that I use on a daily basis to check news events, etc. like that. And then if you can see here on the right of the screen, these are all the symbols in their own categories that I like to, I basically, except for the cryptocurrencies, I go over these every Sunday to look for setups, etc. And trade what I see. I did call this one out to you guys before. This was a nice looking setup still to come on AUD JPY. You can see a nice order block here, break of structure coming into this order block. I want to see a change of character on the 1 hour before I look at possibly coming into an order block here or here. But we'll go over order blocks and everything like that in this course. I just want to bring your attention to the right hand side of the screen here. Another big thing is I do look at the currency indexes. So if you have a USD JPY, USD Chef, USD ZAR, you know that the market maker for those currency pairs is the US dollar. So you need to know what the US dollar is looking to do. And that's why I have like the US dollar index here. And we use the same thing to find our order blocks, our fair value gaps, etc. So we know where the dollar's heading. So then it can give us extra confluence for, say, a US dollar pair. You see how they almost look the same if you look at Dixie and then USD ZAR. So if it came into an order block here and Dixie's coming into an order block here, we've got an extra form of confluence, but we'll go over that in upcoming weeks. This is just, let me just do 2 screenshots for you as well of these. as 1. That's 2. And there's 3. We have a look here, the VIX, this is called the volatility index. So this is the amount of put and call options in the S&P 500. So this will be a complete opposite to what your US 500 would be doing. But these are your call and put options. So this is your basically your confluence for your US 500, your US 100, your US 30s, etc., etc. But as I said, we'll go over these in later lessons. Let's just get our charts set up. These are my time frames. I like to look at as many as possible. Obviously, with the free trading view, you're not going to get as many options as me, but I'd say the main important ones is daily, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. You can survive on those. Not survive, you can thrive on those. And yeah, I think that's about it for TradingView. It's a quick overview. If anyone else has questions, you can if anyone else has any questions, you can just pop them in the chat or send me a direct message or whatever on Discord, and I'll get to it about TradingView. I didn't want to take too much time going over TradingView. Now we'll go into websites. Obviously, I got TradingView, and then another good one. Take this down: forexfactory.com. Now, this will tell you on the day. Make sure your time is set up here properly. I have to do it every time. We GMT +2, doesn't matter where. But then we go home. We can see when the major news of the day is coming out. Now, when major news does come out on the US markets especially, but we trading AUD JPY, there was a big CPY news today. So you don't want to be in the market when those are playing out, for the sole reason that the market goes up and down drastically and will take out your stop losses very, very quickly. So we want to be trading after it. Why do I say after it? Because those massive moves will create a smart money concept narrative for us to then play off of. So if the movement is massively down, we know there's fair value gaps left on the way down that are meant to be filled, and there's definitely an order block above which caused that massive move down, which has a lot of leftover orders still to be put in by these institutions. So price would then come back up and create us a great opportunity to get in. So if I then just show you tomorrow, we've got CPI. Watch the markets tomorrow at 3:30 p.m. and you'll see exactly what I mean. This is one of your things for homework. If you guys aren't working a 9 to 5, or if you are and you've got like 5 minutes, watch 3:30. Watch US 100 at 3:30. Watch the movement it does. It's going to be crazy. CPI is one of those things, and employment claims that moves the market greatly. Now take this down. The news that you want to be watching is CPI, NFP. Those are the two major ones that are going to impact the market. And you can see labeled here, impact, the red. Everything that's red on Forex Factory is a high impact news event, which will move the markets drastically. So you need to watch out for those times of the day. especially if you're putting stop losses down near where price is, they're going to be taken out. So Forex Factory is a great one. Take that down, boys. Then another one, we're going to talk about lot size calculation now. This is very important, especially for small accounts, okay? If you going into a trade, let's say we start with our 100 Rand that we want to do. We want to do 100 Rand to 1,000 Rand as our first goal in tier 1 mentorship. We're probably going to risk 10% of that 100 Rand, so we have 10 shots at a good trade. So I want to risk, what, 10 Rand. So go to Cashback Forex /tools/position-size calculator. I'm just going to copy and paste it in the chat. Charles, some reason my connection is screwed, must be load shedding. We'll catch the recording tomorrow. 100%, brother. Okay, so there's the link in the chat. Found where the chat is, guys. So let's just theoretically say we want to enter a long here. And our stop loss is here. We're not going to be able to get a lot size. Let's just say we entered here. And our stop loss is here. You can double click on this, find your inputs. This is your entry price. You copy that. You paste it into your open price. Your stop level is this price. You copy and paste that into your stop loss place. Make sure your currency is on ZAR. Account balance 100 Rand, risking 10%. Calculate lot size based on MT4 and MT5. Right click a symbol and then click specification. The contract size fields tells you how many units are on one lot. So I'm going on my MT4 on my phone now. If you've got it, do that too. Go into your quote section. Find NASDAQ, which is T100, US 100, something like that. Click on it, then click details. Now, it'll tell you spread, digits, stop level, contract size. Contract size is what you want, contract size. Mine is 10 on this broker. I think this is IFX. I just opened it. Yeah, I'm on IFX, so NASDAQ is a contract size of 10, and we've got our prices, etc. We click calculate. So we can trade lot size 0.0001. However, we can't trade that because brokers only allow 2 digits, so 0.01. So we have to find the mini NASDAQ. So what a mini is basically, so I'm looking at standard because my account's big. I use a standard NASDAQ quote, or could I say trading? Yeah, quote. So I use standard lots. You need to find the mini T100. I don't have in this account, but let's just say, okay, we're risking 1,000 Rand, 100%. It'll give us a 0.018. So you either round it up or you round it down, depending on how good you feel about that trade. But this tool will help you calculate your lot size. I'm hoping this is making sense for everyone. Give me a thumbs up if this is making sense, how to use this tool. Is everyone with me? Okay, moving on. So those are 2 websites that I use probably on a daily basis when trading. Calculating my lot size. First thing I do before anything is I check what news is coming out today, especially if I'm looking at certain pairs. So US dollar pairs is for NASDAQ, any dollar currencies, etc., JPY. It's self-explanatory, okay? Moving on. think it's time that we chat a bit about market structure. Now, everyone says market structure is king, and that's for one reason and one reason only. That is picking the right market direction. So we want to be trading with the trend. A lot of traders say this cliche saying, trend is your friend. And that is right. So we can see here. So first of all, we have a low. This is a high. If this low is above this low, it's called a higher low. So we can see it's just a bit higher. It's still a higher low. This high is above this high. This is a higher high. Now we created a higher low. These equal highs. Lower low. Lower high. Lower low. Lower high. So that's basically the fundamentals of what we call market structure is your highs and your lows. Is it higher than the last one or is it lower than the last one? And that determines your market structure. Okay. We can see it here in NASDAQ. Low, high, higher low, higher high, lower low, or even lower low, lower high, lower low, lower high, lower low, lower high. And interesting to look right now. We've made a higher low. So when I was teaching Matt about market structure and order blocks, I like to refer it as if you dollar the low, see there's a low here, you dollar the low, you won't dollar the high. Here's the low, here's the high. You dollar the low, you won't dollar the high. So now we haven't dollared the low yet. We expect to dollar this high somewhere here. Then we won't dollar this low. We will dollar this high. So this is market structure in its simplest form. Now what we need to know for smart money concepts about market structure is things called break of structure and change of character. I'm going to show you here quickly on the charts and then we'll go through a PDF I've prepared for us. But if you look here, this high, this higher low, when it breaks this peak here, this here is called a break of structure. Okay? Same on the downside. We've got a low. We've got a high. When this breaks this low here, this is also called a break of structure. But when a low breaks a low, so we're in higher low territory looking for another higher low, but we get a lower low, this is called a change of character. So we're not getting higher lows anymore. We're now getting a lower low. This is called a change of character. So where will our next change of character be? When this breaks this high, we're not getting any lower highs anymore. We're going to get a change of character right there if price keeps coming up. Now I'll show you guys, I've got a breakdown of a little trade I took in here to break this high, but I'll show you guys at the end once we've learned break of structure. So that's a break of structure. This is a break of structure. You see how this break of structure, how minimally it went down compared to this one. even the change of character. This shows you the market is slowing down. This amount of break of structure compared to there, it's a lot less. So that's that break of structure. If we look here, we didn't even get halfway compared to the last break of structure. So this shows you market momentum is shifting. Okay. So if we just remove all drawings and we open up my indicator, we can see how it draws it all out for you. We've got our higher high, higher low, lower high, lower low here. Go into the 4 hour. You can see break of structures, change of character happened here. So I'm still developing this. It will be available to you guys, I'd say maybe near the end of the month. I'm still working on a few bugs, and I do have to pay TradingView to be able to publish this. So I don't know if you guys would be keen for this. Let me know. I might have to do something like 200 Rand a month or something to have access to it, because I have to pay quite a bit to host the indicator on them. If you can look here, the source code that's gone into this, it's lines and lines. I didn't do this by myself. I've got a friend who is in the trading game that knows how to create indicators, and he's helping me create the smart money concepts indicator, because he's interested in learning smart money concepts. So I'm helping him out, and he's helping me out in return. But does everyone get what a break of structure is and a change of character for now? If you guys want to answer, you can just unmute now and just reply to me. I don't mind. But just remember to remute yourself. So is everyone happy with break of structure and change of character right now?
All good, yeah, shot, man.
Cool, thanks, Brandon. Okay, now with that information and knowledge, now we can move on to now leveraging that in our favor. So if we go, first of all, I want to say, if we can look here, after a break of structure, we expect price to pull back and mitigate a significant zone in the previous range before continuing to break structure again. So what that means is, go back to the daily. When we have a break of structure, price will come back up into an order block or a point of interest. So if you guys were on my live stream, or if you watched it afterwards, you'll remember I'm saying price goes back to either an order block or a fair value gap. So if we look here, price came into this fair value gap here. There's two of them, one there and one there. Break of structure, came back to a point of grabbing liquidity or a point of interest, order block. This, in conjunction with this order block here, you see how price literally to the T taps this order block, fills this imbalance. That's our point of interest. So that's how we can use break of structure as a continuation for us to find a point of interest using our fib. We can see, I'll just move it over a bit so you can see, we've come up to our green zone here, just into our green zone. So before price comes up, we've noticed this low, okay, and we've broken this high here. We mark out our green zone here, and we look for a point of interest in here, even up to the 88.6. But then in this zone, we're looking for break of structures, change of characters on the lower time frames in here. So if I can go maybe onto the 1 hour, back into this zone, we can see price literally tap into it perfectly. And then what do we have? A change of character here. Once change of character or break of structure happens, we're looking for a point of interest. Boom. Look at that fair value gap there. Use our fib on our green zone point to the T. I can't make this stuff up, guys. I cannot make this stuff up. Then we have break of structure here. These equal lows here. That's the break of structure. Price was so heavy, it came up to fill this volume imbalance. See these things, guys. When markets gap like this, this is a huge sign for you where price is going to come. Look how it just taps into there and shoots down. If you ever see this, when did this happen? This happened over the weekend. Boom. You've got your confirmation in there. So if we then just go back to this, so we can see market coming down, sweeps liquidity. Why does the break of the change of character happen? It's because it's looking for liquidity. So if you look here on the daily, let's go back, it's just easier to show you guys. The reason it comes back up into this point is because with this market going down, how many people do you think have shorted at these zones here with their stop losses above? So many stop losses here, so many stop losses here. Price must come, take them out the market, refill a point of interest to continue. They've taken all these positions out of the market so that they can now run lower. Does that make sense, guys? So this is the theory behind like market structure, break of structures, change of characters, points of interest, etc. I'll go over these points of interest again. I just want to get market structure out of the way so you guys know what I'm talking about when I use my fib, when I talk about break of structures, change of characters. Again, I will release this this indicator to you guys once I've tested it out a bit more, just so you don't have to draw all these out every time, but do practice drawing it out. I'm going to give you guys your first homework assignment now. Let's go to a different pair. Gold. XAU USD on TradingView. XAU USD. On the daily, let's go from Monday the 1st of November till today. If you guys can draw using your line tool, I'll give you the first one here. Use your line tool to mark out your break of structures. To put the label on it, you just double click, you select the text, and you can write in here. I want you to mark out all the break of structures on the upside and the downside, the change of characters. And then next week, Monday, I'm going to have you guys send through a screenshot and I'm going to go through them for you. And this way I can give some good feedback to you guys and, you know, fix what you're doing wrong or congratulate you guys on what you're doing right straight away, so you know how to be correct every time. And it's just like a little bit of a homework. It's going to take you, trust me, 5 minutes to do this. Not even. I need break of structures and change of characters on gold from 1st of November till today. I'm going to write it in the message. XAU USD 1 November to today. Break of structures and change of characters. I call them chotches, just for short. A chotch is a change of character. That's for Monday. So you guys will have some time on Sunday. Just set up your trading view as I have in this recording that I'm going to be doing. So you can go back to the recording, go over this, watch the lesson while you're doing it even. Just so you get it into your brain, how to draw, break of structure, change of character, break of structure, change of character, higher high, higher low. You can see it then. So the continuation pattern I've been showing you. I'm going to post this PDF for you guys as well in resources. So this is what I've been talking about here. You can see this here is your Fibonacci zone. This is what I wanted to talk about quickly. So when I talk about in a premium and a discount, let's say, okay, we'll go from here to this low. If we are in a downwards market, you see how we're waiting for price to come up. This is the 50% zone. I'm going to highlight it in purple. Anything above this 50% line, we call a premium market. Okay? Which means that prices come up enough to where the algorithm sees it's at a good point to go down. Anything underneath that is a fake out, as you can see. Because if you think about it, price needs to come up above the 50% to be in a premium, otherwise it's in a discount here. If you're selling from here, you need the market to move so far down for you to get the same move as if it was coming here down to the last low. So we talk about premium. Whenever I talk premium, if we're going down, it's at the top. And if we're going up, like this, from the low to the high, it's at the bottom. We're in a premium zone where the green is between 50 and 100 in that zone. So if you look on the notes here, this is how a continuation pattern. So you can see here, this box, anything in the gray, you don't want to be shorting. Anything up here in the green, a premium array, you want to be shorting. So market comes, we have a change of character into a premium array. We break structure again. Once we've hit our point of interest, market comes back up into a fair value gap or an order block. Then we know if it doesn't dollar the high, it's going to dollar the low. So we're waiting for a break of structure here. We get our break of structure. Now, to get out of this trade, I'll teach you guys. It's going down into the lower time frames and stuff like that. But this, just know, this is the continuation pattern. This is how markets trend. This is how markets pyramid, what we say. They create pyramids of price action. Within here is your 1 minute, your 5 minutes, your 15 minutes going up and down. But we always do a top-down analysis. So we start with the daily. We know the daily, what's the word? We know the daily bias first. So we're only looking for shorts if the daily bias is going down. We're only looking for shorts in premium array areas. Then we're looking at the 4 hour, the 1 hour, get confirmation entries, the 15 minutes. Then we're dollaring the low. Same with going upwards. We're waiting for price to come down into a discount array. I call it premium both ways. Some people call it discount at the bottom. I just like to say premium is when it comes back into my green zones, into my fib, into a point of interest. We change character on a time frame, like an hour, 4 hour. We come back into another point of interest, into a premium in here to continue our pyramiding. So this is the continuation pattern. Within that continuation pattern is the reversal pattern. But also we are seeing now NASDAQ, etc., moving into the reversal pattern. You can see a break of structure here. This low was not taken out. If we go into this, we see here's an order block. Here, using my indicator. This order block was set on September 2020. We've come back into that. See how we've come into the green order block. You see our price will not close below this order block. How much it's respected. It's closed literally above it. 1, 2, 3, 4, 5, 6, 7, 8 times. It's closed above this long swing term order block. So for you guys that are working a 9-to-5 job, this indicator will help you because it'll show you order blocks from far back that can help you get into these daily trades. So let me just take off these daily, weekly lows. And let me change the candles back. Where's my candles there? So we came into that order block. We had a change of character here on the daily off of this order block, which means there's another order block in here. What is that order block that changed this character? This one here. This one right here. We came into it, and now we haven't dullered this low, we're going to duller this high. The next short option could be here, here, or here. So if you guys haven't gotten this long, but this will come back down into another premium area of an order block. But you can see how we're going to fill this fair value gap up soon. If not today, tomorrow. So yeah, that's just, we have a great example of the US 100 going through a change of character right now, a reversal pattern. So we can see there's a liquidity grab, a break of structure into a fair value gap or an order block and up. Same thing for going low. I meant to put order blocks here. But you can see liquidity grab, fair value gap, or point of interest. There's a few variations I've put in here as well that you might see. But you guys can go through this yourself and backtest it. Look at the charts, you'll see this pattern play out time and time again. And one thing I must say, it's not only on the daily. This will happen at your points of interests. Like, remember I showed you here. That's happened in here, even at the 1 hour time frame. So it came up to a point of interest, a fair value gap, and then changed character here. The reversal pattern. This is what we saw. Now, there's different types of finding order blocks, okay? You have the drop, the base, and then the rally. Rally, base, drop. With these, your order blocks will be at the extremes. Like this. This is a rally, base, drop. Rally, base, in here, drop. Then you have the drop, base, drop. So you see how this dropped, based here, and then dropped again. That was an order block in there. Let me find another example. The drop, the base, the drop. So we can see drop, base, drop. And then obviously there's the rally, base, rally. So that's part of market structure as well, and finding order blocks, points of interest, etc. So if you confused as why I'm finding order blocks at 71%, Sometimes it's a drop-based drop, rally-based rally. It's not always a spark up, spark down sort of situation. Here's a few more examples I've drawn out before on reversal pattern, rally-based rally, back into order block. So this is your continuation patterns, but with the drop-based drops, rally-based rallies, rally-based drop, drop-based rally. So you can have a look at those. I'm going to post that onto the group for you guys now. And then, yeah, I'm going to open you guys up to questions. It's a short lesson today, just because I wanted to get market structure out the way and I want you guys to go and practice it. And then on Monday, we're going to go over order blocks, fair value gaps, liquidity, and stuff more in depth on Monday. But I need you guys to know these core concepts before I move on. So you guys can unmute now and maybe one at a time. If you've got some questions or would like me to show you more examples, just unmute yourself and we can chat for a couple minutes now.
How's it, bro?
How's it, Matt?
How you doing?
Good on you, bro.
Nah, I'm alright, thank you. Bro, can we go over the market structure of AUD JPY? If you don't
Sure.
mind, please.
How did you find the lesson though, so
Yo,
far?
bro, that was kiff. Proper kiff.
Okay.
I enjoyed it. I really enjoyed it.
So I'm going to use you now to help me. Can you see my screen? Matt, stay unmuted while you...
Yeah, bro, I can see your screen.
Okay. So what do we see here, Matt? We've got a high, low,
We got
lower high, lower low,
low
lower
high,
high.
low. It didn't dial at the low.
So what is this? A higher high, higher low.
Yeah,
And what is this?
it can be a high.
Exactly. What do we have underneath?
Fair value gaps.
Exactly. So price will come down into a point of interest somewhere down here to then dollar this high.
Yeah, bro.
So we're seeing a change of character. So this is why I said on there we're waiting for a confirmation entry in here on something like the 1 hour. So we see we haven't broken this low. So you see how price goes in the higher time frames. I'll delete that. Now if we go here, we need to see a break of this low. Can you see that? That's the change of character we're looking for. Then we come up into a point of interest here. And somewhere in here is going to be our entry to then fill down this fair value gap here into a point of interest somewhere here. This fair value gap could possibly be where the market then shifts to then go up. See that?
Up. Yeah, I do see that.
So does that answer your question for the market structure?
Yeah.
Okay. So we're waiting for price to break this. This is why I've got my alert set here. To break this 1 hour low, to come back up into a fair value gap or an order block up here, to then go low. At the same time, remember, I'm watching my news. I'm not entering during news for JPY and AUD that is red. Okay. So just remember that. So everything goes hand in hand here.
Yeah.
Okay. Thanks,
So
Matt.
if you were to look, so Bru, if you had to look at the market at 3:30 tomorrow and it had to be around your entry point, would you rather leave the trade?
I'd wait. You know why? The market could do this, grab liquidity, say this high,
Yeah.
and then shoot down.
Climb it down. Yeah.
And then leaving so many fair value gaps in here for that entry. So once that smoke clears, you can then see the market much better. Don't trade while the smoke is happening. When the fire is burning, don't trade.
You don't want the smoke.
Exactly.
Okay,
you want to see clear.
Yeah.
Lekker. And
Thank you, brother.
then, Warren, do you want to ask a question?
How's it, Jared?
How's it, Brooks?
Sorry, man. How are you doing?
Great in yourself.
I'm all right. I'm enjoying my wine. But
Oh, lovely.
I wanted to ask you, and I've heard it so many times of back testing.
Yes.
I've never understood it because I've always gone according to the Dow Jones, your higher high and your lower low and stuff like that, and putting trades in too early.
Okay.
But whatever you're saying, I mean, it makes so much sense actually with with the algorithms taking out your stop losses.
Yeah.
So I did tell you at one stage I used to trade without stop losses,
Yes.
which is dangerous, but obviously you need to fund your account.
Yeah.
But I've never understood the whole thing of back testing because to me, your volatile times are uh, obviously when your New York Stock Exchange opens and it's normally from about, if I recall, it's about 1:30 p.m. to 2 p.m.
No,
Then the
it's
market
3:30 or 4:30, depending on daylight savings.
Yeah, I just saw because I used to watch it every day for 2 years actually, and I used to find that from lunchtime, our time, the
Yeah.
market used to get a little bit like dodgy and start to head in a
That's
direction.
Yeah. So our lunchtime is it's during London peak session. So
Okay,
there's
that makes sense.
yeah.
So
Um,
then they start with the push.
yes.
Um,
So the algorithm does work in the later session of the um, London session. You know what it's doing? It's taking out the morning highs and the morning lows, grabbing liquidity, as well as the Asian session, which is overnight for us. Their
Yeah.
Asian session lows and Asian session highs. I will go over this as well in a couple of weeks, going over how the markets manipulate the lows and highs of Asian session and London, etc. But that's
Okay.
that they are literally doing it, hunting your stop loss. That's
I
why.
know it's actually it's so insane. But
Yeah.
but no, sorry, to get back to the question about back testing.
Yes.
What is that actually? I don't even know.
So you can see my screen now, can you?
Yeah.
I'm on
Yeah.
the Dow Jones. This is back
Okay.
testing. I'm going back in time
Yeah.
to
So it's looking for
February
support and resistance.
February 2018. I can now, what I've learned, now do back testing here. That's what back testing is going back in time and testing out your strategy. So once I give you guys the strategy in a couple lessons time, you can go back and do it for yourself and test it back in time, because what's happened back in time when things, so on TradingView you'll never be able to go back past 2017, and by then everything was computerized, and this is when BlackRock and everyone were using algorithms anyway, so you can go and back test those algorithms.
Yeah, it makes sense.
Yeah. So it just gives you practice, you know what I mean? Back testing is practice.
Okay, and is that any time frame, or is it
any
purely
time frame?
going on to your daily?
Any time frame, but with the 5 minutes, you won't be able to go back to 2017.
Yeah.
So yeah.
Yeah. Okay. All right. Cool. So all it is just going back into history.
Going back, taking your strategy, and so what I like to do when I back test is I move the market to my right here, so I can't see what's going to happen there. So now I'm back testing on this right corner here. Of okay, I'm gonna, so I see things playing out, and then I say, okay, I'm gonna go long here. So I keep scrolling until I see my position, and I'll be like, okay, I'm gonna go long here, and I'm gonna take out this high, and then I would scroll and then see, oh, that was a profitable trade. Or you can get the pro version, and you get this replay function here, where I can cut the time. So now I don't see anything to my right, and I'm basically trading 29th of December. You see that in the 5 minute chart. So now I can replay this function on the daily, and I want to go trade March of last year. Now I'm in March of last year, and I can then fast forward these candles down here. So I can print the candles like it would print the market.
Oh my word.
Yeah.
As
So
if
this
it's
is back
present time.
testing. Yeah. As if it's present time.
Sure.
And then you can like play it at like 10x speed and stuff
Sure.
like that. So you can watch the market print for you. You can say, okay, I'm entering short here or I'm entering long here. And you can play out the market for yourself. Like that.
Okay, and that's all on TradingView.
Yes, TradingView. That's why we're on it. It's literally used by everyone in the industry as well as your biggest banks. And everyone uses TradingView because it's live data and they've got the best tools. And yeah, you can set alerts, certain prices, everything.
Just another question, Jared,
Sure.
if you don't mind. The you know, I know you in your webinar you spoke about support and resistance, obviously, which we were sort of told about, and sort of the old school. And you tend to use the trading block as your
order blocks.
Your zone. I mean, sorry, your order blocks as your zone, as your zones of support and resistance.
Not really support and resistance. What an order block is an accumulation of orders which was placed by the algorithm that changed the character or broke the structure, what we just learned. So then we know, because they hedge their orders, price comes back into an order block where you see massive volatility come out of, that they have their hedging orders, which I'll go through maybe in 3 lessons time. I'll go through hedging and why these big banks hedge. They basically have to, because they have so much capital. They'll write it down, take out all their sell profits to then ride their buys that they've just kept in that order block sort of thing.
Absolutely,
yeah.
You can see that right there.
Yeah.
It's quite insane.
Yeah.
It's impressive. Okay, cool. Sorry, guys.
No worries. Everyone's allowed to have a couple questions answered. But how did you find the first lesson? Is it insightful for you?
Excellent. What, this one?
Yeah.
Yeah, I've been writing down that, so I'll go through it afterwards, and then just It's to me it's very refreshing, because I mean, I've only done, I mean, I haven't done that much trading, but I've been, I've gone watched the course and that sort of old school stuff, and they've never ever mentioned, like you say, algorithms. And I mean, we all know that you got all these trading bots that are working 24 hours a day. 100%. All these bots are I mean, most of the time when it's not during the the London or the New York Times, everything is done by bots, or mostly, or traders like us. So your markets are very slow, but quite predictable.
Yeah.
But obviously, when your banks and they get involved, it's chaos.
Yes.
But
exactly.
very, very interesting. I mean, that's why I'm here. So this 100%. Is cool.
And then I asked Brendan and Stu, do you guys have any questions?
How's it, man?
How's it? Is it Brandon or Brendan?
Brandon.
Brandon, what's up, man?
Yeah, I've been following quite well, everything I've understood so far. Just do me a favor, I came in a little bit late, I had to do something quickly. If you could go over your tools again, please. I just want to double check.
I'm posting a screenshot with my tools at the end of this. Yeah. Oh. I'm posting my fib settings, my tool settings, this PDF, as well as the lot size calculators in the chat, and then I'm pasting Forex Factory in there for you guys as well. Bookmark those links, and then I'll post the VOD as well afterwards. I'm gonna post it as a private link, as I said, on YouTube, so you guys can watch it whenever you want. It's gonna always be there for you guys to even go back on.
All right, lovely stuff. Short, man. But so far, it's been very enticing. Highly appreciate it.
Pleasure, Brandon. Glad you enjoyed, bro. Stu, if Stu is there, do you have any questions? Otherwise, probably gonna leave you guys for today. doesn't seem like he's here. Give him 5 seconds. Okay, guys. Well, thank you for coming into the first lesson, and thank you for joining the January uptake for Tier 1. It's nice to have met you all and show you guys some insight into the way I'm trading the markets as well as the algorithms these days. And then Monday, I've got a great lesson for you guys. We'll go over order blocks. We'll go over fair value gaps. If you guys can just complete that homework for me. Once you've completed it, just take a screenshot and keep it to yourself. Please don't post it until we go live, because I don't want other people cheating off of you. So it's just the gold XAU USD from 1st November to today's date, the 11th. Just the break of structures on the daily time frame and the change of characters for me, just so I can see that you guys understand it and I can guide you if you need any help. But yeah, I think that's it for today. I'll leave you guys with a thank you, and we'll see you on Monday at 8 p.m. We did start one lesson short because people are going back to work on Monday, and we will catch up that lesson sometime, but I'll let you guys know. And as I did mention in the chat, I am going to Paris and then the Alps end of the month. So I'm going to pre-record the lessons, and then I'm going to get our admin Wade to play the video for you guys. And then as soon as that video is done, I'm going to jump in for the questions and everything for you guys, just so you get the same experience. Okay. But yeah, guys, thank you very much, and I'll chat to you guys soon.